Hey everybody, good afternoon. Today is Wednesday, the 29th, or I'm sorry, it's the 30th of March here. We've got one day left in the month, and so far it's been a pretty wild ride. The S&P 500 actually began the month at 133.15, so we're still down just slightly for the month, but again, it's been a wild ride. Kind of looked like death there for a little while, but that 100-day moving average is where this market held. And whether you really are a big believer in technical analysis or not, you can't dismiss it, because look at how this market responds to various moving averages. For instance, the 50-day moving average, where we started this move back in November, and then how that 20-day moving average held for a while, and then the 100-day moving average. Yesterday I pointed out that the market was coming down to and it did find support at that 5-day moving average, and that's the second time in the since this market gap back up and we've seen it recover, that 5-day moving average has acted as support almost to the exact penny. So if you're not following the 5-day moving average, you're a dope. You really need to take a look at it closely. So I don't think I could say it any stronger than that, or I probably could, but that wouldn't be nice. The 5-day moving average, like I had posted on Alpha Trends yesterday, when we're looking at it, you're not looking at a 5-period moving average. You can't just look at a 30-minute chart. Take a look at Alpha Trends and look at that post. I'm not going to explain it here again, but you have to do just a little bit of conversion as far as the math goes. So the S&P 500 is making this pattern of higher highs and higher lows above a rising 5-day moving average. And as I've been saying for years, we want to trade the intermediate term direction of the 5-day moving average. Now, it doesn't mean it's going to be perfect all the time, because you can clearly point to the beginning of the month when this market was back and forth above and below that 5-day moving average, when we had this indecision here. Well, that indecision gave way, obviously, to selling, and it was the 5-day moving average that held as resistance. We fought that battle there, and now here again, we're getting arguably a little bit extended after this gap higher today, and a little bit of continuation. But you have to always define what time frame you're looking at. If you saw my video that I had posted to Alpha Trends on Monday, I'd put up a free video there that was talking about really the indecisiveness of this market. And what we were looking at at the time was that the market had closed weak on Monday, and I was saying it looks like the market probably needs to come down to at least 130 and a half. I guess it was the 5-day moving average, 130 and a half, and then I thought it would maybe kind of just, I'll show you what I thought it was more likely to do. I thought it was more likely to kind of bounce around in here, come up, find a little bit of resistance, then break past it, and then move higher. But obviously, the market, we lay out these plans and we try to prepare as best as we can for the next day, and have the ideas that look like they're going to make the best opportunity, the best chance for us to make money. But the market doesn't always comply, and we have to have always a list of go-to longs and go-to shorts that are set up technically. And I wasn't really expecting much to happen in the market on Tuesday. I'd said that to in my webinar, that I thought it was going to be probably a waste of time. Well, what ended up happening, of course, was that we had the market show that strength after the move lower. Once the market regained the volume weighted average price yesterday, after touching the 5-day moving average, the buyers took control and obviously have held it here through today, and we closed right up around this daily R2 level. But the point I was trying to make was that we can look at this market and we can look for opportunities, and sometimes they seem like they're there and they seem like they're not there. But if you have a kind of a go-to list of stocks, and that one go-to list of stocks right now really needs to be these rare earth plays. There were great opportunities yesterday in the rare earth stocks. Today, not as much. You look at the 10-minute time frame; they gapped up yesterday, like MCP did. And I've been saying the last couple of days that I think this stock's going to all-time highs here, which isn't really a stretch. It sounded like it maybe on Monday, but now it's not really a stretch at all. There's big short positions in these stocks like MCP and AVL. There was great opportunity in that one that we took advantage of yesterday as it broke some resistance in the afternoon. And today, obviously, a little bit of profit taking. Even a stock like RE was a good one yesterday. I don't think it's set up as good as on the daily chart. And actually, if you caught my video yesterday, I said that, on Monday, I really kind of dismissed SHZ, calling this one really the crummiest one in the group, which actually isn't true because you have XING and CHGS. But this SHZ is really, they did a secondary back here. It's just been a real dog, and we've got this prior support here that potentially can act as resistance. I said that, maybe we can make some money in SHZ if this, if the group goes, but that you're better off focusing on the stronger stocks in the group like AVL and MCP. That those are the ones where, we have already an established trend on a bigger time frame that's more likely to continue. So there is opportunity all over the place. One of the stocks that subscribers are in right now is RAX. We had bought it on Monday, actually, right here as it. Where was that? Let me look at a 5-day chart actually to get in there. Right here as it broke past $39 and. $39. What was this? $39.10, I believe, was our entry price in RAX, and now we've had this real nice rally in it, and it's it's experiencing a nice rally. I was saying that RAC kind of looked like OpenSpace did on Monday. I was saying it looked like OpenSpace did right here, and that OpenSpace was probably 2 to 3 days ahead of RAX, and it was the same type of pattern where we had this nice consolidation. It broke above that resistance, and RAX kind of the same exact type of pattern here. So there is opportunity, and I was saying that it's been a little bit more difficult market, and how quickly things have changed because we've turned out to have a pretty tradable market here with a lot of good-looking stocks. The NASDAQ, for its part, was up again today, and it's still battling, I guess, with what was the January resistance level, but we've broken these downtrend lines, and more importantly, from an intermediate term standpoint, this market also found support right at its rising 5-day moving average yesterday. So if you look at those at that 5-day moving average, what you want to focus on is from an intermediate term standpoint, when we're above a rising 5-day moving average, you look at the pullbacks as potential areas where the market will find support and look to buy strength as it rallies away from that level. You don't necessarily want to be the person who tries to pick the bottom at that point and buy the exact level. Now, it would have worked, but usually you're going to have to bounce around in there a little bit. But the point is, these are the important things to be looking at in the market. The Russell 2000 is at a high for the year, and obviously that makes it a multi-year high as well, and very close to all-time highs. The all-time high in the Russell 2000, that is the IWM, the ETF, is 85.17, 85.20 rather, on an intraday basis. And here we are, just $1.40 away from that level. So real close. I mean, we're talking about just a couple percentage points from an all-time high. And some people say, no, that's not the Russell. You have to take a look at the Russell. Okay, so let's take a look at the Russell, the RUT. The Russell 2000, it's the same thing. So let's not split hairs over that, but instead focus on what matters here is that we've got leadership from the small to mid-cap stocks. The semiconductors have lagged a little bit in here. They're still kind of battling this 50-day moving average. But the same thing we saw in here is that we had the 5-day moving average hold as support yesterday. Now they're showing a little bit more weakness, and possibly we're going to see a transition here. I would be concerned, not concerned, but I would think that the semis would pull back a little bit deeper if we break below 34.50 tomorrow. So be aware of that level. If we break below that, then perhaps we're going to drop back down to about $34 a share, and it could lead to something bigger. I don't think we're seeing a top necessarily, but the market's been kind of range bound here, a wide range that is. this year, and we're kind of just in the middle of that range. Month to date, I guess, we started the month off at $35.78. So we're down about $1, or close to 3%, I suppose, in the semiconductors. But there's been opportunity long and short, and as far as traders go, that's what we want to stay focused on. You of course want to be looking at and aware of the bigger picture, but you simply can't call a top. You can call a top all you want, but when we get these big rallies, staying short in a rally like this is just it's pretty stupid. But we are at an important level here in the semiconductors that we have this prior support area. We've got the 50-day moving average in here, and a little pullback that at least scares the longs might be good for it, but bigger danger to this market wouldn't occur until it breaks below 32. Until then, it's still we still want to give the benefit of the doubt to the fact that we are in a longer term bull market. When we look at the weekly time frames, this might end up being a lower high in the weekly time frame, but until we break a lower low, it's really we're still in a bull market. Financials are boring. I was talking to subscribers yesterday saying I spend too much time talking about these. We never trade them, so just I guess not real interested. I was talking about the retailers. This has been a more important group than you might think here recently, because they broke down pretty hard, and then with Japan, the luxury retailers kind of broke down, and they've been kind of toying with this 104 level. We broke down on Monday and closed right on it, but real nice recovery. So this was a group that looked like if it was going to break down further here, maybe it was going to drop down towards that $100 level, and that obviously wouldn't be good for the rest of the market. But it is something that we want to be aware of, and it's nice to see that it's at least recovered back into the range, not necessarily that that it should be that it's going to go on to new highs. It could possibly go to test these highs if we look at some of the other the individual retailers that are in good shape. So we've got a market that has been sending us mixed messages lately, and that's really represented here with these moving averages crossing back and forth. But underneath the surface, we're doing pretty good, and the key is to stay focused on the individual names. I'm going to run down some names that subscribers are in and that we've been talking about on alphatrends.net. We are along this PQ at $9.30, so it really hasn't done much, but we've got to stop down at $9.20. I think that's a good place to keep it. We're involved in this RAX, like I said, right here from Monday, and obviously if you're involved in RAX, you want to protect these gains. So figure out which one of these higher lows makes sense to you and set your stop. Maybe peel a little bit off, but you want to obviously not give these gains back. But when the trends are this strong, like open, they don't really come in very easily. Look at Lululemon; it has been a monster here, and Lululemon is kind of the same type of pattern, really, as RAX and open space here as well. We were looking at Gilead as a potential long today. We mentioned it in the chat room yesterday, late in the day, and some people had gotten involved. We were looking as a quote-unquote official idea to buy it today above 42 and I don't know, maybe a dime or something, but it gapped up, and unless you were in it, I don't think it ever makes sense to chase these types of gaps unless you get a pullback, and then it gets going once again. Well, today in this stock, we didn't get that. What we look for is a pullback and maybe a little bit of consolidation, and then a rally that at this point the volume weighted average price would have looked like this, and then we want to buy in here as the momentum begins to come back into the name with a stop below the low of the day. Well, again, that didn't happen, so you can't take credit for, hey, this one would have been, it was on our list, so we're going to sell it up $1 or $2 or whatever. It's just not realistic. Another name we were looking at today was to buy Vista Gold above $4 a share. It didn't reach our criteria. It looks set up nicely. You look at that weekly chart, you look at this 10-minute time frame, it closed strong, and actually we were looking at buying it above $3.99. $1.29. I think some people have cheated and are getting in, and that's fine. It's got some volume in here as well. So Vista Gold's a good one to keep an eye on. We were also looking at Abbott. This is one that started to move yesterday afternoon, really past the resistance, and unless you got it there, again, it just doesn't make sense to chase these names. Only a liar will tell you that they bought it here. Well, I can't say only a liar because obviously a lot of people bought it there, but I think it's irresponsible. I see some subscriber sites that say, hey, we're long this one and that one, when the low risk entry isn't there. The first 15 minutes of the day, you want to be very selective in what you're buying, and unless you're going to just buy the open and set a stop below the low of the day, if that's your game, then that's a different strategy. But a lot of times those first few minutes of the day or when you get these sharp reversals that end up hurting really badly if you don't move along quickly. So AVL is another one. Like I said, we've been talking about this one and been trading it. Sold it. Actually, I sold a little bit of what I had left here this morning, and now the stock probably needs another day or two to consolidate. But you just can't take your eyes off of these rare earths. In other words, don't think that, well, it looks like they need another day or two to consolidate, so I'm not going to watch it tomorrow. You still have to have it on your screen, because some days they look like they need to consolidate, but then the buyers come in and it's so close to all-time highs here and has a decent short position in it that this thing could be up substantially from here. Fuel Cell was, there were a couple of them we were looking at in the alternative energy low, low price ones. Fuel Cell was one of them. Fuel Cell's been really kind of choppy here the last few days. I'm still involved in a little bit of it. I don't know why I'm giving it so much patience. It's worked, I suppose, but it's not. It's not really behaving the way I would have hoped it would. The one trade in this area, I was also talking yesterday that Obama was talking alternative energy today, and that we wanted to. We were looking at CLNE yesterday. Actually, on Monday we were looking at clean energy as it battled this 200-day moving average. Well, today it gapped higher and ran very nicely, so people made money in that. And I had held some of this WPRT overnight. We were talking about this one yesterday, above $19 a share. And that's where it got going in the afternoon. I held a little bit, and foolishly, I'll show you because it's embarrassing. Pre-market, I thought, hey, wow, look at this, aren't I a hero? I'm going to sell it here at $19 and I think it was $19.80, maybe even $19.70 on the gap higher pre-market at a half hour before the market opened. I thought I had a good sale. Well, and then I was chatting with someone. I said, I think I made a mistake there, because here's a stock that's breaking to all-time highs, and it actually has a short position of 3.4 million shares, which when you look at the average daily volume of 760,000 shares, the shorts got crushed in this thing today, and that's obviously something that you cheer for when you're long. It sucks to be on the other side of it, but Westport, I sold it $2 ago in the pre-market today. I mean, how foolish is that? Part of it was because I was away from the market for most of the day and wanted to make sure I didn't give back gains, but a lot of opportunity in this market. MPEL, MPEL, here's a casino name with a great looking longer term chart. You look at the daily time frame. As I said yesterday, it's pulling back still a little bit here, but we've got a real nice pattern to it. It's still probably a day early because we're seeing this pattern of short-term lower highs and lower lows, but maybe even getting above $7.80, $7.75 tomorrow, that MPEL could continue to move higher. It's trades plenty of volume each day, trades 4 million shares a day, so that's a good one to keep on your radar. NE, we were talking about this one. I don't like the way it trades, but said that above this level it looked good, and I'd say a stop in NE probably goes down at about 45.30 right now. PCX still seems to be Still early. We've got this inverted head and shoulders, maybe you could say. I don't even know if you would want to say that. I'd like to see a more defined right shoulder there, but we've got some clear resistance at about 26 or so in Patriot Coal, so keep an eye on that one. A lot of people excited about coal stocks, after the Japanese nuclear disaster, but I'm being told that Penn got going nicely here today, and Penn's still in that range, but big uptrend or big up day, and Wynn Resorts still looking good as well. Sean, thanks. This has been in a longer term uptrend. Wynn Resorts has just a real nice steady 2-year uptrend basically for Wynn, but MPEL, great looking weekly chart, and let's just take a look here together, MPEL, at the short interest, because that could play in here, and we've got 8 million shares that have been sold short which haven't been covered. Now, I look down here at September of last year, there were 3.7, so they're starting to cover, even that number's up 2 million from February, but 8 million shares have been sold short, and I can't imagine that many of those guys are in a winning position here. So the 8 million share short position could add a little bit of fuel to the upside in here. So definitely keep an eye on MPEL here the next couple days. What else were we talking about? SRX, and this one got going here today. SRX has a nice looking weekly chart. The daily, it gapped up today, unfortunately, but there was a nice little spike here late in the day that was good for a short-term scalp, but you had to really be watching it to get involved. WNR, here's a refining company that kind of, looking, it seems like it should have gone today. And here we take a look at that 10-minute time frame. This is the level we were looking at. So I think some people are probably, got involved in that strength. If you're not involved, keep an eye on this thing. And, I'd say stop maybe down near here. But the next push higher, I think that WNR has the potential to sustain some of this upward momentum. It's digested this big rally from October, really kind of more through time than price. And the weekly chart suggests it still has some room to run as well. Harley was one we looked at for today. It's got a nice looking weekly chart. The daily, you could say it looks similar to this OPEN right in there. It also looks similar to Rackspace, and it looks similar to Lululemon before it broke those lines. So when you look at those last three stocks and then look at Harley, this is kind of where Rax was 2 days ago. It's where Lulu was 2 days ago. It's where Open was about 6 days ago. So still keep an eye on Harley Davidson because could be just tailpipes are just starting to warm up here on this one. Let's say what else. So we're talking about some of these stocks that looked bearish, like we'd been trading VCI, and I mentioned this one yesterday again because they've been looking bearish, but then they get the shit squeezed out of them. So the shorts have been getting squeezed in these bearish-looking stocks. And yesterday I said, we've been involved in DISCA. Yesterday I said, listen, this one looks like it's getting ready to squeeze higher. It's kind of down 4 days in a row. It's at this bigger level where we've seen support, and I wouldn't be surprised to see it get squeezed. Well, it gapped up today, rallied to that 5-day moving average, then had another push. So, these stocks that look vulnerable, another one would be RDWR. It's kind of thinly traded, but it's been threatening to break down here, but hasn't broken down. So I think it's probably got a pretty decent sized short position. I wouldn't be surprised at all to see this stock up near about $37.5, $38 a share. I'd also keep an eye on HNR. Here's a stock that's kind of been setting up, this Harvest Natural Resources. Longer term chart looks decent, and the daily time frame, it's still consolidating in here. We're getting that 10-day moving average to rise back up again, and you get this thing above these highs of the last week and a half, maybe even above 1565, that's where the upward momentum could come into it, which is sustained. We're getting some higher lows here as well. So there's still a lot of opportunity in this market. I don't know why I was such a downer on Monday, and I'm not a super bull all of a sudden either. I think that really the market's probably going to correct a little bit more through time, but the opportunity is there, and in my main guidepost for the intermediate term trend will always be, what's the direction of the 5-day moving average? Where are we in relation to it? Well, we're getting pretty far extended away from it here. So, when you get it, you don't want to get excited after these rallies or as these rallies are really in progress. I mean, we could be at this point or maybe we're at this point. Instead, you want to be looking to get long after those 5-day moving averages are tested, and then they break above key, volume weighted average prices like yesterday here on the 2-day chart. So I've just got one request for a stock here, which is Priceline, PCLN, and let me just take a look here. M. Schwartz is saying, Mark, how much does the different closes in each time frame impact the moving average? And I don't know who Mark is, M. Schwartz, but the name is Brian, but I get that you're asking me the question. And the point is, how much difference does it make? They're going to be approximately equal. It doesn't make a big difference. The thing is, with any moving average, you can look at the 200-day moving average, or you could look at the 40-week moving average, and they're going to be in slightly different places. But the point is that we don't want to be buying at the 5-day. Moving averages are a reference point, something to compare price to. They are not a system. I realize many people use them as the basis of many systems, trades, and that sort of thing. But if we can look at it as a reference point and say, hey, it's near that 5-day moving average. And another question here is, well, is this 5-day moving average you're talking about, is it simple or is it an exponential? I'm going to tell you that it doesn't matter, but I look at simple moving averages because I'm a simple person, and that's what most people look at as simple. But the exponential moving average might look like this. It might be, just a little bit closer. Sometimes it's a little bit further away, but they're in the same general area. And if you're using moving averages as a system, I think you're using them incorrectly. But if you can use them as a visual reference point, something that you can compare price to objectively, that it doesn't matter if it's going to be, on one time frame the 5-day moving average is 130.42, and on the other time frame it's 130.26, and another time frame it's 130.58. The point is, in this general area is this important moving average, and you look at it, well, it's also an important prior level of resistance, or whatever other technical thing might be in there. Maybe it's near the 50-day moving average or the 20-day moving average. If you can look at and find more information that backs up your thesis, then that's what you want to be looking at. So simple or exponential, I'm going to tell you it makes zero difference. And whether you're looking at the equivalent of a 5-day moving average on a 10-minute, 5-minute, 30-minute, 65-minute time frame, really doesn't make a lot of difference unless you're trying to say, I want to buy at the 5-day moving average, which to me is not the smart way to use a moving average. Priceline, it's in a massive uptrend. It's not at all-time highs. It's at highs, not seen in a decade here. What do I think about Priceline? I think it's innocent till proven guilty. I wouldn't be a buyer here after the stock has just moved from 450 to 500. So it's just had a 50-point or 10-11% movement here. I think it's in need of a pullback before you buy it again. But it's innocent till proven guilty. The trend is higher, so you give the buyers the benefit of the doubt. That's the only question I see here, so I'm going to go ahead and wrap this up. Thank you, everybody, for tuning in. We'll do it again on Friday, and trade well.